James, what is the bigger risk to markets right now? That we get some sort of trade truce between the U.S. and China and stocks tear upward, or that we get no deal and things drag on and the outlook it deteriorates further?
Yeah, that's a tough one, Lisa. I mean, it feels like we've moved much further towards the softer, happier, trucey, risk-on end of that spectrum, certainly in the last month or so. Equities still really haven't been able to get close to the highs in the US, but they've certainly been bouncing around closer to those highs. We've obviously had kind words on both sides. We talk of phase one, things moving forward. That's definitely more positive than just constant escalation. But as I'm sure you've heard from guest after guest after guest after guest, the content is still completely lacking. This is all pretty vacuous stuff. It's a veneer of positivity, where in reality the underlying issues are not going away. And as we've seen in terms of the Vice President's speech and the Chinese response to it, underneath this all, I still don't think we have two parties which are seeing eye to eye. So, I keep being wrong by being bearish on risky assets because they're not going down, but they're not really going up either, so I don't feel that wrong. And my view is still that the next big move is lower.